All right, welcome to the first weekly prep. So we're going to overlook the market, look at the fundamentals, and see where we're heading for the week and what we should expect. So before we get into all that stuff, I want to talk a bit about how I want these market preps to work. So I got these weekly market preps. So essentially ahead of the week on Sundays, I'll be looking at the market, looking at the news, like I said, and just trying to set out what I'm looking for and what kind of trades I could be taking. I also select the days that I want to be trading as well. So I could be making these quite regularly. Doesn't mean I'm going to trade the session, and I'll be talking about those on my daily market preps as well. But yeah, it's just a great way for me to select the most important sessions, even kind of have a good idea of how I want to manage my risk, my position sizing. You certainly don't want to blow up, or wreck your account before the most important news has gone through. So, if let's say you're waiting for NFP on Friday, you don't want to have like ridiculous drawdown before then. So that's a very important way for me to manage my risk before going into the week. So yeah, these market prep sessions are going to be much better than this one. Obviously, now this is the first one. I'm gonna have some different animations. I actually use Quantower a lot. Now I just already had this trading view set up here. It was ready to go, so I thought, let me just use trading view this time around. I have my indicators, I have a few things to show you guys in terms of levels and specifics. So we're gonna use TradingView. Great platform. I do really like TradingView, but I do execute and run my algos and have most of the action habits on Quantower. So, but for the purpose of overviewing the market and getting ready for the week, I mean, TradingView is great. So in terms of news, let's just take a look at. We're gonna look at a bit of the economic calendar and see what we should expect. So we do have the Fed rate decision on Wednesday. So obviously that's the very important news piece of the week. We're going to be looking forward to that. And even before that, I went a little too far on this. So we got Fed rate decision. Same morning, we got Bank of Canada rate decision as well. We'll see what happens there. So, of course, we got a bit of jolts the day before that. Nothing wrong with it. I wouldn't obviously we're still waiting for the rate decision, but I wouldn't completely neglect the jolts. Take a look at all of the major the key elements that give us a perspective on the strength of the economy, and just take them into consideration and see if it kind of suits what the market is expecting, and if there are any outliers that could increase the confidence in the strength of the market, or decrease our confidence in the US economy. So it may not be it might not direct the market, but if you can combine a few elements, so we have a few news pieces where the data just shows that we're looking for, we're seeing a weaker economy, or we're seeing a situation where the Fed may have to reduce the rates, or will they increase the rates. That'll help us have a good perspective on what to expect. Also, Japanese economy is also something that we may want to take a look at, just to make sure that we understand what things how the carry trade could essentially affect the US market. So in terms of Japanese yields and how the carry trade will essentially affect the US market. I'm not going to go into all the specifics there. It's basically Japanese, they borrow money from their banks because they have negative interest rate, and they put it into the US economy to get a yield on it, right? So a great way to make money. We have institutions doing that. Essentially, if the Japanese start reversing that and they want to increase the interest rates, now we're going to see a lot of money exiting the US treasuries, and that could certainly have a big effect on the US economy. So just something to take a look at. And I actually don't go that far, but I don't really see many people giving the Chinese data much relevance, just because I don't think the transparency is there. But the stronger their economy, obviously, and the things going on that side of the world certainly does affect the Japanese, and then obviously can affect us as well. And it can affect us in many different ways. But if you're into that kind of stuff, yeah, let me know. So yeah, for this week in terms of news, we're really looking at the rate decision. Also, December is not typically a month that I like to trade that much. I usually kind of take a step back. Now, things have been really different this year, so I'm not opposed to making some good trades. But next week we got CPI, but let's not. And the Japanese rate decision. Interesting things there. But let's not get ahead of ourselves in terms of news. And let's look at the technicals. So, if we head over to TradingView, now we have the higher time frames on the bottom here. So I have my daily candlestick charts here for NQ and ES, and then I have my lower time frame up here. So if we start with the dailies, now on ES we can see, and these charts are very similar, right? But there are some key differences here. So now you can see I do have this line that was traced. I don't really do trend lines so much, but we do have this one, which has been I guess a key trend line here. We can identify, and then at the bottom here we do have somewhat of a trend here, and we can see that we have a break at the bottom, and we're kind of seeing a sideways market here, and we've been going sideways in this range for a little while now. So we're not quite sure exactly where we're heading. If things, if the fear cools off and we start seeing some, a reduction in the rate in the interest rates, and we see a strength in the economy, we could be testing these highs again, trying to test the top of that trend line again, and that would be bullish. That would certainly put us in a more of a bullish scenario. However, I think there'd still be a lot of caution up here, so we'd probably just kind of be more confident that we're going to stick in this range, and perhaps we could be testing these these higher areas for a bit longer before we get a change in the context, right? So if we have some, I guess like pivoting economic data or any kind of catalyst that could change things around for the market. And that's kind of like pretty much what we're doing when we're in these sideways markets. We're basically waiting for economic data to come out, and we're also exposing ourselves to, essentially just waiting for a catalyst, right? So let's see where things take us, what kind of news will affect the market, and what will the market react to. Also, for the downside, now we do have a few levels here identified. So if we actually break down this area before testing the highs, that's certainly bearish. And what does that mean in terms of price action? Doesn't mean we're going to go straight down. We'll probably just we could bounce around and keep trickling down and test some of these moving averages. Okay, so what I got here? We got 20, 50, 100, and 200, all SMAs on the daily. So we could be testing these moving averages and also testing these levels. These levels I essentially just regrouped. We have some key areas here, okay, and we could see a reaction at any one of these levels. Now this one is really based on the moving average that is at this area. I don't plan on keeping this one as time goes. I would be very surprised for price to immediately reach this level. I still identified it, but as we continue, this moving average will continue up higher, and we'll probably be removing this level. Nevertheless, it's there for now. And then we have this area here. Now we can see these highs, once we're a level of resistance. So these are the levels we have on ES, right? So we got the 61. This one not so relevant, but still 62.20s, 62.75, 63.85, 87, and this area here is 65.35. For the higher levels, 68.82 approximately. So we got quite a little area here. You can zone it out, and then same here. So 69.31 to like 69.52. Okay, and these levels are the main areas of interest. It could also take some time for us to get there, right? So this is very different from the lower time frame charts, where we actually we'll be expecting some momentum between levels, and for things to be happening very quickly. Doesn't mean they can't do that on a daily, but the nature of the move will be quite different, right? Now on NQ, similar kind of zones. They are different. So we have the moving averages obviously haven't crossed and moved in the same way. It's different instruments, but they're very, very similar. We can see, we have a lower low here, similar to ES. We have this high is higher than the previous one, so the market structure is looking quite similar. I would expect, obviously, for us to test, these highs eventually, and then, perhaps even try to reach even higher up here, but depending on, obviously, like I said, just like ES, what we're gonna do. And then for lower levels, okay, I'm just kind of displaying I don't have any labels for these boxes. Could turn them on. Okay, so this is what we're looking at for NQ. Well, the way I trade, I look at ES, NQ, and YM. One of the indices that really helps me understand what the market is doing is ES. Even if I'm trading NQ, I'll still be looking at ES volume and levels to understand where we're heading. So ES is very important for any indices trading. Even if you're trading stocks, really can give you some good insight on what the market is doing. So on a lower time frame, okay, let's just zoom in to ES on this one. Okay, so we do have our TPO charts. This is our SR zones. So we have all of our zones already plotted. So I don't have to manually plot any of these zones. They're all here. And these, and like as we can see, like these levels are, I mean, price just reacts to them. Okay, very powerful tool we have here. And before all of these sessions start, so before the RTH sessions start, we already have these levels plotted. Okay, so throughout the overnight session, we knew the point of control was an area where we could see a reaction, and we've seen a very strong reaction here. Okay, now this was last Friday. We've had quite the move, and then head back to essentially where we started the RTH session. Going into this week with the rate decision on Wednesday, I would recommend just keeping it cool. There may be some small opportunities, take them. I'll keep the size very low. Now we can see there are quite a few levels we could be going and testing higher, and then there's a few more levels we could be testing lower. I don't even like, as for Monday, I would wait for Monday, Tuesday, and see. Yeah, at least wait for Monday and see like what we get in terms of volume, price action, and then you could put in some trades on the Tuesday, but we're waiting for Wednesday really is what I'll be doing. That's for sure. And I actually, and that's the thing with these kind of weeks, really. There's important news, but sometimes when you're waiting for key elements, so especially for news that happens later during the week, like there's some weeks where I got perhaps some a few key elements of economic data coming out, and then you got NFP on Friday, and the week just ends up being more of a no trade week, even though you still want to put in a few trades, try not to force too many, and the following week is often the better week to trade, because you have a clear direction of where the market is going. Obviously, where the Fed stands in terms of probability for the next rate cut, or if they just like this week, they will be making a decision. We'll be going into next week with a clear, understanding of what it means for the economy and the indices. And what's really interesting is you'll also notice how the market can react to good or bad news in different ways. So sometimes a strong economy can mean an upward move for indices, where, especially in the context where we want to make sure that the Fed is going to cut the rates, and we don't have a concern for the economy. But then in other situations where we have a weak economy, we'll be looking at and we'll be hoping that the economy is still show some signs of strength, and that the Fed will still cut the rates, right? Or maybe not even cut the rates, perhaps just keep them as they are. And then you may see the market, move up, perhaps. So these are different situations. Kind of like on the technical side, we also we can see, if you look at order flow, you're trading order flow, you can see some aggression or some absorption, and it could mean some different things in different times, right? So yes, that's one of the main differences, really. It's just how the market does different things according to the context. So that's about it for this week's market prep. Nothing special, nothing crazy. Next time around, I'll show you guys my quant hour setup. I'll show you how I have my calendar and how I plan how I plan my trading days, and how I also I guess you can call it like journal or debrief. I basically have a plan, and then I have the end result, right? So and I break it down on, did I respect my plan, did I not, how my trading sessions went. So I'll be showing you a lot more into my trading as these prep sessions take place, and as I'll also have some live trading streams as well. So ton of content coming up. Now I wish you guys some good trading, and manage your risk and make some money, guys.